Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we will be discussing one question of marginal costing where we are required to find out profit on sales based on various information given in the question. Ascertain profit when sales is 2 lakhs, fixed cost 40,000, break even point is given 1,60,000. And second question is ascertain sales when fixed cost is 20,000, profit is 10,000 and break even point is given 40,000. Let us start with first sub question 1. Contribution at break even point rupees 1,60,000 will be equal to fixed cost, because at break even point there is no profit, there is no loss. So contribution minus profit, we get answer there nil. So here fixed cost is 40,000. That means contribution is also 40,000 at break even point 1,60,000. We got a detail of contribution, that is rupees 40,000. We'll try to find out PV ratio. Formula of PV ratio is contribution upon sales multiplied by 100. Contribution is 40,000. Sales 1,60,000 multiplied by 100. So it is 25%. So we have calculated profit volume ratio 25%. We are required to find out here profit at sales of 2 lakhs. We'll find out contribution at sale of rupees 2 lakhs. Formula is sales multiplied by PVR, we get contribution. Contribution is equal to sales here 2 lakhs given in the question multiplied by PVR. We have calculated 25%. So contribution at sales level of 2 lakh is rupees 50,000. We are required to find out profit. Profit is equal to contribution minus fixed cost. Contribution we have 50,000. Fixed cost, it is given in the question 40,000. So we got profit rupees 10,000. We got at sales level of rupees 2 lakh, profit rupees 10,000. Let us go for the second part. Ascertain sales, that is to find sales when fixed cost is 20,000, profit is 10,000 and break even point they have given rupees 40,000. In question we have information fixed cost 20,000, profit 10,000 and break even point is 40,000. So at break even point contribution is equal to fixed cost. So here fixed cost we are having rupees 20,000, that will be equal to amount of contribution. Now we have figure of contribution, we can find out PV ratio. Formula is contribution upon sales multiplied by 100. Contribution we have 20,000. Sales at break even, it is 40,000. So PVR we are getting here 50%. So we got PVR. We are required to find out here when fixed cost is 20,000 and profit is 10,000. Fixed cost plus required profit divided by PVR. Now here we have information of fixed cost and we have information of profit. Fixed cost 40,000, fixed cost 20,000 and profit we have 10,000. Divided by PVR 50%. So the amount of required sale comes to 60,000. So in this question we have learned how we can find out the amount of sales based on if we have break-even point and details of fixed cost. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda.